Today, Black Monday, let's talk about the yen carry trade. But first, I'd like to say, from several requests I saw online, I am now posting all my videos at the same time to X under All Things Financial Zero, and also on YouTube at All Things Financial Zero. So they'll be on the three platforms. Okay, so on Friday we said that we felt this was strictly a yen carry trade unwind. I turned on Bubble TV this morning. All we're talking about is, the weak numbers supposedly, and that we need to have all these emergency cuts. The only thing I'm going to say on these emergency cuts is be careful what you wish for. The Japanese just raised their rates by 25 basis points, and look what happened. If the markets perceive that we should not cut our rates by half, or someone said 75 basis points today and 75 basis points in September, it could have disastrous results for us with our huge amount of treasuries we have to raise this year. But that's another discussion. Let's talk about today. A couple months ago, I did a video on how the firms protect themselves against big down markets risk. And the firms are in the market. They own stocks. They have a almost $1 trillion, $1.5 trillion, JP Morgan, a $3 trillion balance sheet. So how, with the hundreds of thousands of issues that you have, how do you protect yourself? Well, they buy the VIX all day. That's all they do, buy the VIX. And when something like this happens, look what happens to the VIX. So, you could have been purchasing this down there, basically somewhere between, 6.5 there and 15.5, and now it's 50. So you triple your money. But really, they're doing that to protect themselves against the things they're holding that are going down. So the VIX is how you can protect your portfolio. So I'm watching everybody today, and I know since 2008 and 9 that the number one strategy is buy the dip. Okay, and I see this today. I have clients texting me that they're buying the dip and so forth. But this is what I would say to you. This came out from Goldman Sachs today, that our stock market makes up 70% of the entire world's stock market. So if you add up all the stock markets in the world, we represent 70% of it. But we're only 18% of the production of the world, and we're only 4% of the population. So I would say that there is plenty of room for this market to correct itself. Whether you believe it's going to happen or not, that's entirely up to you. What I'm only saying is there's plenty of room. Okay, back to the carry trade. You can stop and read this. But basically, for 30 years, everyone used the yen. And he says here, he thinks it's over $4 trillion. This is what I've been reading, okay? I did see someone today who said that they thought it was between 10 and 20 trillion. It's very difficult to tell because there's many different things that you can do with the yen that people do, okay? So stop and read this so that you can understand that this is what's going on, and it's far from over in Japan. We have to figure out, one, how they're going to stop the yen from going down, and so that they don't have to raise the interest rates when their inflation rate's higher than their interest rates, and it's just a mess. How they're going to get out of it, I'm very unsure. Now this chart is showing the difference in the yen carry trade and how much we unwound so far. And as you can see on Friday, we did a pretty good job on the bottom there. But I would say, just from this aspect, looking at it from the VIX, from the yen carry trade index, I would say you have 2 to maybe 3 times the amount of selling still available in this trade, just in this, okay? So what does this all mean to us? As the article I posted there, this has been basically free money. And what did I tell you? The firm set up a system where they can collect the pennies in front of a steamroller, and they consider it free money until the moment it's not. Well, Friday was the moment it's not. The other thing I would say, if you go back and look at my videos, the last two of them, that people knew something up last week, starting around, I would say, the 24th, okay, July 24th, 25th, when a 10-year bond really started to rocket up, okay, and today it's like 370, all right? So they knew something was up. So either they knew that the Japanese central bank was going to break down and raise the interest rates, or there's someone in trouble. And this is what I'm watching today. We're going to blow somebody up. We just don't know who. Is it a private equity fund? Is it a hedge fund? Is it an investment manager? Is it a bank? What is going to blow up? Because something is definitely going to blow up. Now, until we see the blow up, we just don't know how bad this is going to be, in my opinion. It looks bad, but there's a lot of firepower that the central banks can bring to bear. It all depends on what blows up, because whatever blows up will tell us what they're really going to have to do to save this situation, okay? And that we will find out relatively soon, if not today, by tomorrow, because of the margin calls, right? They'll call the margins today, and you have to deliver tomorrow. So that's the first thing. The second thing I want to address is this interest rate cut. I don't know, people. I don't get it. I mean, the economy isn't that bad, although the number was a little weak, but last month we had Houston, for God's sakes, the whole city didn't work. And the difference of 40,000 jobs, I'm not a buyer. I just don't understand it. And now they want to cut 75 to 150 basis points. Look, if we lived in a bubble all by ourselves and there was no world out there and we didn't need other people to buy our treasuries and blah, 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 okay, maybe. But I would tread very, very carefully if I was the Fed. So I know they're having an emergency meeting, at least they say they are, so we'll see. So what do you think? Are they going to cut today? Should we cut today? Is the selling going to continue? Like and follow, and certainly comment.